Hey everyone, I am back and welcome to the Dorky Review. Let's get to it. So we start with a recap of this leg down here. We started from the consumer spending and trade deficit widening, and it caused this move down in the Fed GDP now estimate. But I don't really expect this will be the actual print at -2, -3, more like -1, at most -1.5. But this is a model, and models don't act that well in extreme circumstances. But this being said, I do expect consumer spending to remain low or go even lower. I do expect the trade deficit to remain low or go even lower for the US. And that is because the tariffs narrative is causing companies to pull demand from the future and build stockpiles of raw materials. And this, as long as tariffs go on off, this should continue. Uh, and in the same way, consumer spending should continue going down because of tariff fears, and uh, the combination of these two items is likely to cause Q1 earnings to be uh, unexpectedly low. So Q1 earnings, in my opinion, will give us a multi-leg pullback. We haven't had one in quite some time. The last one was here. We had a pullback that lasted from 28th of July until end of October, so almost 3 months. We are kind of in the same situation. How big was this? Just 10%. This one I think will be a bit larger, but we shall see. So go back here. Uh, Short term, I expect we move up because no bear phase is straight down. We will have periods in which we go up. For now, the target is to go back to the yearly open and get rejected there. Next week, we have a CPI print expected to be around meet expectation. I really hope we don't get a hot one again, at least meaning above expectation. But regardless of what happens there, I think we will start a new leg down and get rejected at the yearly open. Uh, the week after that, we have a FOMC meeting, and the Fed will not be dovish at all. I think they will be hawkish. So this bull phase should last at most until OPEX week, where we get the FOMC meeting on the 19th. So this is the most I think we will see of the bullish phase. Then we begin a new bearish phase. We should go to the 550, 545 area. This is my target for the next sec down. Mm, this is a scenario in which we just retest the low and then go higher. We'll see. But uh, this this is kind of my expectation. We do another leg down, then we bounce again. This is the post OPEX move in which we do a bit of a counter trend move. Then this area here becomes resistance. So the previous low of 565, 570 becomes resistance. And then we begin Q1 earnings. And for the reason I mentioned with the trade deficit and consumer confidence, consumer spending, uh, I think Q1 earnings will disappoint. And we finally get the the final leg down, the third one, into the 520, 530 area, which I think will be the bottom. There is a small possibility that I give it like 5% odds, depending on how bad Q1 earnings will be, in which we go all the way to 575, 580 to retest the previous all-time high from 2021. I don't think this will happen quite now. Maybe a bit later. Depends on how the recovery here happens. So we go all the way to 520, 530. Then the minimum rally we shall see is going to be 12%. to the yearly open. Then we have scenarios. We either go do like a W move. This is where I think it's more likely we see this. So I would move this here to give us like a huge bear phase, uh, depending on what happens afterwards. But I think this should happen in end of April, beginning of May, something like this. This is where I see the bottom happening. And we see a huge rally during May, 12%. This could potentially go into June, meaning the next leg down, and this would be June OPEX if we get the move down version. This could also be June OPEX for the retest, and then we go up. So this is my scenario here about how things will play out. We finally get a free leg down kind of move. We go to 545, 550 first, then we go to 570, we go to 520, 530 area, then we go back to 590, and then we get rejected again. The question is whether this becomes a double bottom at 525, 525, 530, or we go all the way to 480 into June OPEX. Don't think this will happen. Like I said, I think this is very low odds, so I'm going to remove it from now. My base case is either a retest or even a higher low. Like instead of going all the way down, we only go down to 550 and do this like this. So this is also plausible. But I think we shall see 520, 530 before this move down is over. But not bear markets are not straight down. There are huge bear market rallies or counter moves that we should be seeing soon into this two AVU up area. Now with yields, I'm not really concerned about TLT going down again. I think this is to be expected. But my target remains the 97 area of getting out. If it goes higher, it is what it is. I missed out on some gains, but that's not the end of the world. I would rather miss out on any potential uh, losses from this not going higher. So my expectation, this is holding exactly where it should be. Like we had this gap up, we are holding here. As long as we don't go lower than this, or the 90 area holds, like we can go briefly below 90, but we should recover by end of day. As long as this holds, I think this continues going higher, not in a straight way. But sync with that continuation in the market pullback, we should see continuation up in yields, and eventually this should stop in the 97 as high as 100 area here. And then things get iffy. Uh, Assuming the tariffs eventually come and they finally stay, which I think they will, because like I said in one of my previous videos, for tariffs to work, meaning bring in lots of money to the budget, encourage manufacturing to move to move locally, they have to be there for the long run. The tariffs have to be in place for years and years and years. The minimum is 5 years, ideally 10 years. For this to happen, this needs to happen for them to change behavior in businesses, to change behavior in consumers, and this bullshit tariff on-off thing is not good for anyone. It's much better for the tariffs to come into place and everyone knows they're there. They are there for the foreseeable futures. No more flip-flopping. Is better for everyone. Um, and I think this is where we will be going eventually. For now, it's just I don't know, touching the stove and pulling the hand away. But eventually they will get used to the heat, the metaphorical heat, and they will be here to stay. And that actually has a chance to stoke back inflation, which is finally coming down. Uh, and one of the reasons why this is like this and a new bull phase here is because market loves inflation. Uh, Once tariffs come and stay and they don't go away, then that is when the inflation trade 2.0 begins. And that is the one with oil, that is the one with yields going to 6%, and so on and so on. So uh, the trade I posted for oil coming to a bottom. This this poke to 65 is not it in my opinion. Like going to 65, it can go all the way to 60, although I don't think it will. But I think the bottom in oil is going to come relatively in sync with when the market bottoms. So I think we will have some consolidation here, even though it can go up, obviously, like it can do something like this in the short term. But my view is that we will do something like this. And when the market bottoms sometime in towards the end of April, oil will bottom as well. Yields will bottom as well. And when the 2.0 inflation starts, it will start in sync across the board. So crypto, commodities, yields, and so on. And that timing for me is end of April. Uh, when despite bad earnings, the market will bottom on those bad earnings because it knows inflation 2.0 is coming and it has to go up to compensate for inflation 2.0 coming. So when we get at the end of April that uh, signal, I think that's when oil also starts going up. And I think that's when yields start going up. And I think that's when crypto starts going up. And the expected move in Bitcoin, the new leg up, that's when it's going to come. Until then, I still think we go back to this like 70 area for Bitcoin, and then maybe we get the next leg up. And it's all synced together, like DXY, yields, crypto, oil, commodities in general. So this is the playout I expect. I hope it helps. I'll post it on Twitter, not on Twitter, sorry, on Blue Sky. Twitter is dead as well. Until next time, have a good one. I hope this helps you. Bye bye.